Russia is part of the G20.
They kicked them out, of course, because they illegally annexed Crimea. I mean, how would you have responded if Russia invaded or took over?
They took Crimea during Obama. 2014. They took. Well, now they're looking to take the whole thing. Then they took a big chunk of land and people, as you know, during Bush. And now they're trying to take the whole thing during Biden. You know, the only one that didn't give them anything is Trump. They never took anything with Trump, nothing, not 2 inches of property of land. But Crimea was Obama. And then Bush gave them a lot, if you remember. And then, in fact, it's a sort of a standard little phrase. And Biden's giving them everything because this is a war that shouldn't have been had. And the only one that didn't give them anything is Trump. It's the way it is.
What's the message from Wall Street about these tariffs? So there's been some nervousness on Wall Street about the impact.
So. I mean, there hasn't been very much, and I think it's going to make the United States stronger, and in many ways it could make other countries stronger too. You know, other countries want to have a strong United States. They want to have a strong America, and I think it's going to make us very, very strong, much stronger. And we have a lot of work we're doing on the military. Our military already, I've authorized some contracts to be built that are very substantial. We're building the greatest equipment in the world. We have the greatest military equipment in the world. We're building it. At some point, when things settle down, I'm going to meet with China, and I'm going to meet with Russia in particular, those two. And I'm going to say there's no reason for us to be spending almost $1 trillion on military. There's no reason for you to be spending $400 billion. China's going to be at 400 billion. We're at $1 trillion. We're going to be at close to $1 trillion. And I'm going to say we can settle this on, we can spend this on other things. We don't have to spend this on military and I'm going to be meeting with China. You know, we were trying to de-escalate nuclear, and I was in a position where Russia had agreed and China had agreed we were going to start, and then we had a rigged election, so that never took place. But this one was too big to rig. We won by so much that it was too big to rig.
You want to do the China meeting in the United States, or would you travel to China for that?
For what?
A China meeting. Would you do that here or
I tell people all the time, you know, the question is who's going to have the first meeting, where are you going to, I say this to Putin, to President Xi, I say to everybody, never bothered me, you know, I'm willing to say I'll go first. It doesn't matter. It's the end result that counts.
U.S. stocks increased in anticipation that President Donald Trump would enact pro-business measures after he won the 2024 election in early November. However, things on Wall Street haven't always been easy. Trump's tariff measures and the rise of the Chinese AI chatbot DeepSeek caused some disruptions, but they have so far only lasted a short while. Most of the Magnificent Seven's high-flying stocks took part in the upward trend. As CEOs Elon Musk and Mark Zuckerberg have gotten closer to Trump, Tesla and Meta platforms have led the way higher. Nevertheless, Nvidia has not performed as well in recent months, and things could get worse from here. Some investors hold the Trump put idea, which holds that since Trump sees Wall Street's performance as a reflection of himself, there will be few negative effects on the stock market while he is president. Accordingly, the idea is that he will support measures that raise share prices and refrain from taking any actions that would essentially depress the market. Furthermore, theoretically, he is likely to reverse any policies that begin to hurt the market. Trump's initial tariff ideas have already shown some signs of his intentions. The stock market plummeted when Trump first announced high tariffs on Canada, Mexico, and China. On the day of the news, the Dow Jones Industrial Average fell more than 600 points. The Dow recovered most of its losses when Trump quickly reached short-term agreements with Canada and Mexico to at least temporarily halt the tariffs for a month. But Trump is also demonstrating that his more comprehensive tariff proposals remain in place. China replied with tariffs of its own after his previously announced 10% tariff on Chinese imports went into force. In addition, he imposed 25% taxes on all imports of steel and aluminum. These additional tariffs have not yet caused any market reaction. However, keep in mind that during his campaign, Trump proposed a 60% tariff on Chinese goods. A 10% duty would be a less extreme result. No Magnificent Seven stock has underperformed since November 5th. The introduction of DeepSeek's new AI models contributed to some of its downfall. It's possible that new generative AI models might be created at a significantly cheaper cost than anticipated and trained using older CPUs, according to the small Chinese company's public comments. Export limitations on some of its more sophisticated components, however, also presented problems for Nvidia. under former President Joe Biden's administration, which suggested more limitations on which nations U.S. chip makers could sell some of their most potent products to and in what amounts. That obstacle really started to get stronger in early January. Russia and China are among the nations that have already been subject to restrictions. However, this new proposal might restrict the amount of chips sold for data centers and would affect 120 nations, including Mexico, Portugal, Israel, and Switzerland. The goal of these new regulations is to plug the gaps that nations like China have been using to obtain next-generation semiconductors manufactured using American technology. The plan has been deemed foolish by Nvidia. In the end, Trump will have the last word on this. Before deciding whether modifications to the trade framework will take effect, the Commerce Department is now conducting a 120-day consultation period. On this matter, though, it seems that both governments are in agreement. The Chinese company allegedly used older Nvidia chips to build its large language model, which reportedly cost less than $6 million to develop and train compared to more than $100 million for OpenAI's ChatGPT. In addition, some lawmakers urged Trump to impose export controls on these chips after the DeepSeek news. China contributed almost 13% of Nvidia's total sales in the 9 months that ended on October 27th, followed by Singapore at 19% and Taiwan at 16.8%. Trump's thesis will be tested, but it's unclear how he will move forward with export limits or tariffs. Among the biggest weighted businesses in the benchmark S&P 500 is Nvidia. The market as a whole is probably going to suffer if the business begins to struggle. So what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication, so if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now let's get back to the video.
President Trump announced plans to implement reciprocal tariffs on all major U.S. trading partners in order to country-by-country assessment to reset U.S. trade relations. The reciprocal tariffs won't go into effect right away. The president says perhaps by perfect day, April 1st. Maybe he'll say, hey, we were just kidding around. Joining us now, Wendy Cutler, former acting deputy U.S. trade rep in the Obama administration. She's now vice president of the Asia Society Policy Institute. And Nazak Nikakdar, she's former Commerce Department official in the first Trump administration. She's now chair of Wiley's national security law practice. And Ambassador Cutler, I don't know how many times yesterday you saw, the president's pretty good at messaging at times. And these aren't tariffs, these are reciprocal tariffs. And that immediately makes you think, well, wait a minute. So they're already being levied against us. It almost starts to get you on board that if they're doing it to us, why the heck haven't we tried to reciprocate?
So, yeah, on the face of this proposal, it seems very reasonable, right? Let's make them pay what we pay. But frankly, it's just more complicated than that. We have a tariff schedule with almost 10,000 lines, almost 200 countries, and he's asking his advisors in less than 2 months to come up with a reciprocal tariff proposal that he could put into effect. And moreover, he's asking that an array of taxes, non-tariff measures, and subsidies be quantified to also contribute to the tariff rate. So this is going to be a yeoman's task to put it to operationalize. And, you know, from my perspective, a more targeted approach probably would be more beneficial to the United States.
Maybe we can use AI.
The roughly 10% drop in Nvidia's stock price over the last 3 months indicates that good news has been hard to come by for investors in the firm lately. Even though it delivered exceptional growth and guided over expectations when it reported its last quarterly results in November of last year, the once-flying artificial intelligence, AI chip company, has been bogged down by a number of obstacles. Numerous factors outside Nvidia's control have caused the stock to decline, including worries about a slowdown in its growth due to declining demand for AI chips, increased competition, export-related limitations, and the recent breakthrough claimed by Chinese startup DeepSeek. Nonetheless, Taiwan Semiconductor Manufacturing's January 2025 sales data indicates that investors' worries regarding Nvidia's performance and the state of AI chip demand may be exaggerated. Let's examine the possible reasons for that. As a fabless chipmaker, Nvidia merely designs semiconductors rather than owning any fabrication facilities. TSMC, the top semiconductor foundry in the world, manufactures the chips for consumer electronics businesses and fabless chip makers. For this reason, last month's 36% year-over-year increase in TSMC's sales shows that there is still a need for Nvidia's AI chips. More significantly, in the last 2 months of 2024, TSMC recorded sales growth of 58% and 34%. Given that these 3 months fall inside Nvidia's fiscal fourth quarter of 2025, there's a good chance the chipmaker will surpass Wall Street's expectations when it reports its results later this month. Of course, TSMC has other clients besides Nvidia. It's important to remember, too, that Nvidia accounted for 11% of TSMC's sales in 2023, making it the company's second largest customer. Recent events also suggest that Nvidia's revenue share of TSMC may have grown. For example, in the fourth quarter of 2024, TSMC's largest customer in 2023, Apple, reported a 4% year-over-year drop in iPhone shipments. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now, let's dive into today's video.
Joining us here, KG. Maybe we're going to get that big move by this weekend after all. This seems like a pretty good step for bulls.
Yeah, definitely, especially if you're looking at the longer term time frame. But if we're going on the intraday side of the equation right now here, Oliver, 6120 is your squeeze potential for the market. We got around 6 points away from that level here. We're backing off a little bit, seeing some put activity in the 6110s right now. So we might have a little bit of a floor there to really try to contend with. But overall, this is obviously a really good market when you're looking at the breadth of the market for today, as well as the commentary coming out of the White House, which probably put a lot of traders and investors at ease. Not only when you're looking at the equity market, but also the options market. So what's the biggest risk? The unwind, an aggressive unwind, movement to the downside. You still have some pen risk sitting at a 6,100, but you want to be able to at least hold that level. Anything below that, 60.83 is kind of that flip line right now. But this is actually a really good market. We still have some time to go. Let's see what the market on close order is going to be. That's going to be 10 minutes before the close, where we get those final tallies there. And if we do get any type of aggressive call buying activity going into the close to try to put these dealers maybe a little bit more off sides, really try to ramp us up here. But it is possible that we could actually make all-time highs here today. And that's actually what's being reflected in the options flows even for tomorrow. If you're kind of looking at what's actually catching a lot of attention, the 6145s are already catching a lot of attention. And then you are looking at a greater positioning at the 6200 level, which tomorrow I would suspect that probably will be our new positive gamma area when you're looking at open interest.
So, if 61 now becomes support for us, then it's like, it kind of seems like as close to game, set, match as it gets, because that's been the place that we haven't been able to hold above. We got a lot of red wicks on the candle chart the last couple weeks, basically around this level and above. So if we come down and hold it, then, boy, nice day.
Oh, yeah, definitely. And actually, if we look at the E-mini S&P 500 futures chart, I think this gives you a better perspective. And I like going back and forth because the E-mini S&P 500 chart is really going to show what happens overnight as well. What's actually very interesting, if you look at the last 12 trading sessions, so basically 2 weeks of trading, 2.5 weeks of trading almost, 9 out of the 12 days we've actually hit the 20-period moving average, but we have not closed below that area. And for today, the candle that we have set up is a hammer candle. We like to see those. It's at least engulfing the body of yesterday's candle, which is also good. Yesterday's candle was also a hammer candle. We flushed to the downside, tested that 20-period moving average, saw some buyers coming in and at least closed above that level here. And if we wanted to really kind of look at this, we potentially do have an inverse head and shoulders pattern that has been taking place here. We talked about that a week ago where we had these wicks, if you're counting the wicks. And if that's going to be the case, your neckline is going to be that white line to the upside. You close above that, that means you actually did complete that inverse head and shoulders pattern too. So Wicks recovering the 20-day moving average, not really seeing any aggressive selling when it comes to large volume out of one day, one day or two. We're not seeing successive days or consecutive days of a large volume on the downside here. This looks like the market really wants to try to clear this out, which is kind of interesting, right? And I think if we look at it for tomorrow, every single Friday that we've had since President Trump's inauguration, we've had sell-offs in the market on Fridays because of the uncertainty, a de-risking event taking place. But today, with the tariff conversation that just took place here, knowing the fact that these are going to be, for the most part, delayed, and then kind of looking at the structure as to the clarity as how they're going to calculate these tariffs for each and every country, gives us better perspective as to what the perceived risk is going to be. So does tomorrow kind of look like a normal Friday where we would have volatility being crushed and usually green days? That's generally what we see on Fridays rather than red days on Fridays. So that's what I'm going to be keeping my eye out on. And if that is going to be the case, once again, that also sets us up for a bullish market. And then going into the weekend, the weekly candle also is going to look very favorable. So a lot going on for the bulls right now. They're 90% of the way there. That's get us out of this range.
Exactly.
In the last 3 months, TSMC probably manufactured more chips for Nvidia, which might have resulted in higher sales growth for the latter. It's also important to note that in order to fulfill the strong demand for AI chips, TSMC is anticipated to boost its advanced packaging capacity this year by about 85%, reaching a range of 65,000 to 75,000 wafers per month. It is anticipated that Nvidia will receive 63% of this additional capacity. With 13% and 8% of the market, respectively, rivals Broadcom and Advanced Micro Devices are predicted to finish far behind in second and third place. All of this suggests that by 2025, Nvidia's supply chain for AI chips is probably going to become more robust. Nvidia's enhanced supply chain may enable it to complete more orders and maintain its remarkable growth, especially considering that big cloud computing providers like Amazon, Microsoft, Alphabet, and Meta platforms are planning to significantly increase their capital expenditures this year. In 2025, these 4 digital behemoths are expected to increase their total capital expenditures by 46% to an astounding $325 billion as they continue to invest in the development of AI infrastructure. It is evident from the explanation above that Nvidia is poised to gain from a good market environment for AI chips. Nvidia should be able to maintain its robust growth rate this year, as seen by the company's efforts on strengthening its supply chain to meet increased demand and the recent impressive increase in TSMC's sales. Analysts predict that Nvidia's revenue will increase by 52% to about $196 billion in the recently started fiscal year. Don't be shocked if Nvidia surpasses that threshold, though, as the $102 billion in additional capital investment by major tech companies in 2025 will surpass the approximately $83 billion in additional spending from the previous year. Since Nvidia is predicted to own 85% of the AI chip market this year, it is in a great position to take the majority of this additional capital spending. As a result, when Nvidia reports its fiscal 2025 fourth quarter results on February 26th, a better-than-expected performance appears to be in the cards. This could be the impetus this AI stock needs to get back on track. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.